Hey guys, this is Patrick and you are trading with Prime. Today we're going to be going over something a little bit different. I want to share with you guys how I manage a trade. The question has come up and I told people that I would put a video out, so here it goes. We're going to choose AMD because this is a prime example. No pun intended. This is a prime example of using technical analysis and doing our managing of the trade. As you can see, AMD went sideways for quite a while. I believe it was like 10 or 11 or 12 or 13 weeks. It broke out on this day back here on heavy volume. The following day, we saw a back test. Beautiful trade entry. Here's the thing. This trade was actually taken back on this day back here. And no, I did not write it out this whole time. I actually took the trade back here and I closed it a few days later, trading it with options. But just showing you what it could look like in theory. Let's zoom in here a little bit to the days in question. So, and really quick here, just for something to note, reversal patterns. Go to Google. This might get a little bit basic, but that's the point. Reversal patterns. Check them out. See what they look like. Reversal candles, check them out, see what they look like. You have everything from hammer candle to piercing line. You don't need to know all of these, and as you continue trading, you will start to see which ones really matter and which don't, which ones really apply. There's more to it than just the candle itself, but it kind of starts with the candle and then it builds itself upon that. More patterns: engulfing, hammer, harami, piercing, doji. First thing is, very first thing, this might be different if you're a scalper. Well, we all should have trading plans. Maybe they're general, maybe they're broad, maybe they are, however that looks like. Any way that you can get it down into writing so that you can visually see it on paper, so you have a set of rules to follow while you're trading, even whether that's time of day that you're trading, or entries, or stop losses, or targets, or risk versus reward, anything that matches or meets that criteria of your trading plan. Second thing is, I use support and resistance. That might be different for different people. Technical analysis, what vehicle you're going to be using. I also use options, mostly options. I do have shares, and part of my trading plan is I have a portfolio. I only trade a certain percentage of that in options. You have shares, whether you're trading ETFs. And then as far as managing the trade. So I'm going to go back to the chart here. And just really quick, I'm going to go into this. We saw a reversal candle, and at the time it was at support. So this was a trade that we took. As price continues here, this is about an 18% move in price. So that's why I didn't, continue chasing this trade. My options were expiring. So I did take profit. But we did see price go up, trade sideways, and then go up again, playing out the bull flag pattern on this day. And then, to be honest, I thought it was going to break out the following day. It didn't. It got rejected here. It pulled back. But there's something I want you guys to think about here. And I want to give you a little bit of a secret. Maybe it's not a secret. The low of this candle, this green candle, which in a way is a breakout candle. The low of this candle is 53.31. So if you were in the trade and you did buy it down here on the doji, you could, at this point, move your stop loss up. Move it up to the low of this candle, right? Move it to the low of that candle. And I know what some of you are thinking. Well, yeah, but you would be stopped out on this day. And the answer is you wouldn't, because you would have waited for the daily close. Once you see price on an intraday level come below your stop loss, if you're trading a daily chart, that's exactly why we wait for the daily close. Now, don't take this to the extreme, because let's say it's blood in the streets and, Cuban Missile Crisis or whatever black swan is going on. You're not really going to wait, 12% to the downside to get stopped out at the end of the day. Use your best judgment on that. But on a day like this, like that we were having an AMD back here, that was just a simple dip. So the next thing is, well, what about this candle? Well, let's take a look. The closing price in this candle was 53.59. The low of this candle again was 53.31. So you weren't stopped out. You're still in the trade. Okay. And if I do this And I'm not saying, so a lot of people will move it to the next day's low. They'll just keep moving the candle to the next day's low. I'm not suggesting you do that. You can. That is a trading. That is a strategy. And especially if you're new, that does help out. I like to use the bigger candles, so I'm looking for the big candles. You know, and you could call them breakout candles, whatever you want to call them. If I go to the low of each candle and do a price on it, I'm going to keep going here. I'm just going to put the lines out here. Let's say if there's a gap there, put it at the low of the gap. If it gapped up and then it finally put in a low of day, put a line across there and call that support. Or maybe it's even at the opening of the candle. Put a line across there and call it support, because if price has fallen to a gap, it's most likely going to want to fill it, or not most likely. A lot of times it'll want to fill it. And also, when you're trading a gap play, pretend on this being one giant green candle, so you could actually move it to down here as possible too. Finally, I'm going to get to this price up here, because this is where we did see a close below. We finally saw a close below. The low of this candle is 77.99. The closing print on this candle is 76.88. Yes, I would have been stopped out. And I know what some people are thinking. They're like, well, would you really risk that? I mean, if this was resistance, would you really risk this? Why don't you sell it up here? And the answer is because you don't know that this is going to happen. Nobody knows what a chart is going to do. Now with AMD, it's expected that at some point it's going to pull back, and it's going to pull back a lot because it ran a lot. So I mean, the RSI is at 80 or 85, or whatever the RSI is at. It's pretty high on the chart. Keep in mind, it would be better to sell up here. The thing is you don't know when it's going to stop. The only way that you can know is by having somewhere on the chart to measure, saying to yourself, if price closes below this price, I'm going to sell it. Another question you might have is, well, yeah, but if the day closes, if I wait for the day to close and the closing price of the day, if I wait for that, I can't sell it till the next day, and by then we might gap down. The answer is wait 10 minutes before the close of the day. What are you seeing throughout the day that leads you to believe that? Hey, this is probably going to close below my stop loss, so I'm going to close out the position. I'm up however much percent. I'm going to close out the rest of my position. The other thing is I trade all time frames. We'll go to a 4-hour chart. I'm trading all time frames, right? So I do the same thing, but I'm going to be looking at 4-hour time frame. And the reason why is because reversals happen on smaller time frames. Actually, let's do an hourly chart. I'm writing this trade out, right? I'm looking for a reversal candle. And just to give you a little bit of perspective, we see how big these green ones are. I'm not looking for a red candle that's bigger than the green ones are. I'm looking for a red candle that's bigger than all of the previous red candles, or preferably all of the candles that are just before it. So here is a reversal candle. I wouldn't consider this small one here a reversal candle. It is a little bit bigger than the previous candles. I would consider this one a reversal candle. And not only that, it crossed below 2 of the moving averages, and it closed at the low. That's what told you it was a reversal candle. It closed at the low of the candle on the hourly chart, telling you, hey, if you're in this trade, you might want to get out of the trade because lower prices are more likely than not. And so as you saw, there were lower prices. So hopefully that puts it in perspective as far as all time frames, primarily the hourly chart, the 2-hour chart, the 4-hour chart, the 8-hour, the daily. Sometimes I'll look at the weekly just to know the trend of, the overall trend. So one last thing before I leave you guys here. Here, that's what I want, is a black screen. So here is support, here's resistance. Okay, actually, this is really what it is. All of these are support / resistance. Okay. Oops, support. So if I'm down here at support, it might do this, right? If you're down here, the trade is entered. we get to resistance, and that's when you zoom into your hourly charts. You go from the daily chart and the 4 hour and the 8 hour and the 2 hour, and you zoom down to an hourly or even a 15 minute, and you start looking for reversal candles. And then you look at the volume of the reversal candles. If it's trading sideways, that's one thing. If it's actually being rejected, which is a reversal candle, that's another thing. So if you do see a reversal candle at resistance on, you know, on the chart here, if you're looking at the daily chart and you see, if you're using daily support and resistance, but you're on a 15-minute chart, it might not correlate. Now, hourly, look at the hourly chart on your day, you know, your year-to-day resistance and support. You might see a reversal candle on the hourly chart. If that I hope that makes sense. I didn't want to give it a tongue twister there. If that makes sense, give it the time it needs to run. Let it play out. Enter the trade. As soon as you break that next resistant level, move your stop loss up to just below the resistance and let that chart play out. And then again, do the same thing again. As soon as it breaks, as soon as it broke right here, we're going to raise our stop loss. And let's say it does this. Let's say it comes all the way up to right here and then rolls over. Again, well, why wouldn't we take profit right here? The reason why is because we didn't know it was going to roll over. Right? It's about probabilities. We don't know when it's going to roll over. I'm willing to let price come all the way down to this support, and I'm willing to get stopped out at this price because I want to see if this will continue up higher, if that makes sense. It doesn't matter what time frame you're trading. It doesn't matter what time frame I'm trading. This is how I do it. It's a combination of all of the things together, a combination of actually looking at the candles themselves, actually looking at, are we at support and resistance, actually looking at the volume. I'm putting it all together. I'm looking at the RSI. I'm putting all of the things together, and I'm saying, you know what? Hey, we are definitely getting into, here's our trend line, right? Every time we get to the trend line, we're going to be buyers down here, and you can't see it on the screen, but we're buyers in this trend line. It rallies away, and let's say there's resistance up here, and we have resistance coming across here, and guess what? We had a close below the low of this candle. We sell it, right? We close the position. It's not worth it to see if there's any more to squeeze out of this. Now we're going to go neutral, and now we're going to see if price breaks through resistance, and if it does, then we'll consider getting back into the trade, right? But we're not going to take a trade going long at resistance. I hope that makes sense. And it was more about managing the trade once you're in it. I wanted to put it in perspective of the S&P 500. Are you feeling stressed out? Lower your capital, right? Lower the capital per trade if you're feeling stressed. Implement the trading plan. If it's in writing and you're following the plan and you're following the rules, it shouldn't be stressful. Zoom out. We've already talked about that. Zoom out. That's part of stop chasing it, because we'll see in the morning time when price spikes, we'll start to chase it. In fact, that could be a whole other video. Stop trading to make up for losses. If I'm constantly worried about the losses that I made yesterday, it might prevent me from making a trade that's a really good setup, and I might second guess myself. Well, I won't second guess myself because I'm following my trading plan. But if you're too focused on the negative sides of, like, I just lost a bunch of money, I need this next trade, I need to make that money back, I have to make that money back. If that is your thinking going into a trade, it might be hard to profit from the next trade if you're thinking you need to make up the money from the last trade. Post trade review, and I don't mean post it in the Discord. What I mean is, well, yeah, if you'd like to post a trade review in the Discord, great. But what I mean as far as this is only you know how to, only you know the trades that you took at what prices. Only you know your own mistakes. Yes, you can ask other traders, but they don't really know as well as you know. You know where you went wrong, and the way you find out, you have to take inventory. A business has to take regular inventory of what they have in the store. Okay? Otherwise, they don't know what's in the store, right? By the way, Sunday we are doing a options course/Q&A. You can join us. It's for free on YouTube this Sunday, 5 p.m. Pacific Standard Time. If you've liked this video and if you got value out of this video, hit the like button. If you're new, hit the subscribe button, hit the bell notification. That way, when we do go live, you won't miss it and you can be a part of the options course. Hopefully you guys gained value out of this, and we will see you soon.